guys, Bearish here today, so hope you're all doing well. So today I'm just looking at Bitcoin. So last time when I made the last video was on Sunday, so the 21st of March. So previous to that, we did have the low right here around 53,200. So we did break that to the downside. There was a break to about 50k, so we bounced off 50k area. So I'll just draw another line to indicate where we bounced off. I think it was just above 50k, like really close, within 100 or 200 points. Just to be exact, it was 50,360, 50,360, so 50k, 360. So we bounced off that, and we did have some momentum to the upside from that bounce. There was a trading opportunity, I guess, but you can see that there is some of the shorter period indicators are starting to get overbought again. So we did have a break there. So I'll just move to the. So I'll just talk about this. So we could get a little bit of a cross here, but maybe not much. We probably will see a fake out here, and I'll tell you why in a sec. Not for sure, but we probably will. Actually, I'll just tell you now. So this was a daily chart. Each bar was a day. Now we're on the weekly chart. So today I have added two moving averages. So one actually is an exponential moving average. It's the exponential moving average 5, and that's currently at 53,878. So it's below where we are now. And we do have the weighted moving average 9 today, so I got 5 on the top here, and I got 9 at the bottom. So WMA it stays closer to the price, whereas exponential moving average, it drifts farther from the price. So if you were to have a exponential moving average and a weighted moving average, the exact same input, so let's just say both were 9, the WMA is going to be closer to the price. I think that's just the way the formula is. We can go over the formulas in another video. Right now, I just wanted to point out that we did get a bounce off that. The EMA 9 actually, not the WMA 9, so this is the WMA 9 again, but the EMA 9, it's closer to about 48, 47. We are maybe about 48, between 48 and 49. So we did almost get a bounce off that. Basically, we almost bounced off that. We got close to it. Again, support is still down here. The next major support. I guess there's something here, right? Around 44, 45, 43, but that's drifting. There's nothing really there. That's a break that's touching there. So if we break that, we probably come down to here. And I can let's just call it secondary support, because some people might be counting on that, but I'll just draw it around here. So the secondary support's the white line, and the blue lines are the primary support. So let's just say that. So we'll probably come down and see that white line being tested, maybe some momentum coming up, but I think for sure eventually we'll test that major support at 38,000. The reason is, and I'll show you in a sec, but I'll just denote again that the weekly moving average convergence divergence indicator, the faster, known as MACD. This is a faster period MACD. So at one point this was actually crossed down. This was actually crossed down a bit when we were near 50k. Excuse me, and there was like a bar here that was going red. So there was like a little red bar, kind of like this one here, the first red bar. So after that red bar, we haven't closed yet. So if you're new to trading, or if you're still learning about trading, you want to learn, or you've been trading for a while, just note that the close is something to note. So we haven't closed yet. Bitcoin closes on Sundays at 5 Pacific time and I think 8 Eastern time if you do the time change. So there's going to be a bar here that's closed, and then there's going to be another bar that has opened. So there's going to be an open bar and a closed bar. So there is momentum here, there's divergence, so you can see as that peak went up, as this peak went up, the pink bar, by the time we got to the pink bar, moved lower while that moved up. So that's showing a strong divergence here that the price wants to maybe come back to get these lines, want to come back to meet down here to negative infinity. So the price moved higher while that happened. So the signal line moves up, all the bars move down. It's kind of more intermediate stuff, but the stuff to note is that the price moved up, right? So the price here moved up and the momentum moved down. So that goes to negative infinity, the momentum. So here that this is a default MACD, so it's just the default inputs. So at one point earlier when it touched 50K, this was actually inflected to negative infinity. So there was a lot of room for that to come back down, which it hasn't, and there is a divergence here again. So the signal line moves up, while the histogram moves down, right? So that's showing divergence, and you can confirm that signal line and that the midline. I don't know what it's called for sure, but I just call it the midline. So the signal line and the midline, you can confirm the signal line, the blue line, with the price moving up, so it should mimic the price. So while the price moved up, the histogram moved down. That's the whole point. And the RSI also moved down, as we've said before. So note that. And what I want to show you is the monthly candles before I just talk about something else. So there's a lot of room to those moving averages. So you can see the exponential moving average 5, it's at 39,040, and the WMA2 is at 32,997. And remember, the WMA2 stays really close to the price. It tries to stay close to the price. So if that was an EMA2, that would be closer, and that would be in the 20s. So these have drifted very far away from those lines, and as we said before, they come up, they come down, they cross back up over them, and they eventually cross back down. Whether they move up a little bit up or a little bit down, they still cross back down. The point is they're really high and there's been a lot of volatility. But what I want to talk about is the price of gold. So we'll just start with the price of gold. So what I want to show you is that last time on the bearish cycle from 2011, August 2011 to December 2015 was our last bearish cycle. So that's when gold was decreasing, right? Have a look at that. It's 4.5 years. And then after that, we had a bullish cycle. So it went from January 2016 to like July, August 2020. Have a look what happened last time. So as you can see, it wasn't even as volatile as Bitcoin, and as you can see, eventually it came down, right? It wasn't even as volatile as Bitcoin, but it still came down with some trading opportunities along that bullish run to go short, and some trading opportunities to go long as that went short too. But the point is, the major cycle was 4.5 years each way, up and down. So have a look what happened initially in 2011. We came up and touched the high volatility bands. We drifted far from that EMA 5 and that WMA 9 and from that center line. And eventually we crossed back down. We closed up, we closed down, we closed up, we closed down, we closed up. Still above that center line, the yellow line. Eventually we got a break of that center line and a close below. Then we had a hard recession in gold, right, as the dollar moved up. And then on the flip side, we had the same on the bull run. Again, we touched that band. So have a look. If we have another cycle like that that lasts for like 4.5 years, and it peaked out in like August 2020. Look, we've only been what, maybe a little bit more than half a year since then. I mean, yeah, so maybe, you know. Look at that. We still have look, let's just say we're going for another 4.5 years. Let's just say an example. Not for sure that we will. But have a look. July 2020. That would put us at like December 2024. Can you imagine going for another bear cycle for 4 years for gold so that it would come and test these lows? It's possible, but it's not for sure, but it's possible. And let's just say, hey, you know what, code berries, I don't think that's going to happen. So let's just say there's only a 50% probability of the bearish cycle. So let's just say, hey, you know what, code berries, only 50% of that time is going to happen. That means, what is that? We stopped in December 2024. So December 2022. That means that gold can go bearish for two more years. Or like another almost 2 years, right? 1 year and 3/4. That's only a 50% probability of that bearish run, of the full bearish run, right? Let's just say, hey, you know what, code berries? That's still too much. That's still, I don't believe it. So let's just say let's say a 50% probability of that. So a 25% probability. What is that, December 2022? December 2021? That's the rest of the year. Maybe give or take a little bit more, right? Let's just say that was a little bit more and that was a little bit more. That's a year and two or 3 months at 25% probability of a bear cycle. And have a look what the dollar did at the same time that gold ran up. Look, gold went up. The dollar went up during that time. Look, August 2011 came up, the US dollar, up here. It came down, it bounced off resistance, couldn't break that resistance, went down, went up again, still couldn't really break that resistance, maybe got a point or two, right? The top of that was 100. Maybe a point or two, even less than 2 points, 1.75 points, right? So then it went down, and we had the same cycle, 4 years up, 4.5 years up, and 4.5 years down. Have a look at the RSI, have a look. Look at the bottom of this cycle, have a look. Where is it? 37, right? Maybe less, 36.9. Yeah, 36.96, maybe that's even too much. 37 on the dot. Have a look where we are now. It's even lower than that. We're at 30s, we're at 30, just above 30, maybe 32.3 or less, 32 on the dot. Right? We're even lower than we were before, and look how high that it ran. We could still go higher, or we could go lower, but look how low we are. We haven't been this low. When's the last time we were this low? 2008 was when we were this low. The dollar was at 70 cents. Not 70 cents, 70 points. 70. That means that there's still a lot of strength in the dollar. And have a look at these cycles. This cycle ran for how many years? April 2015. It ran till January 2018. That's 3 years one way, and another 2.5 up, and another 2 years down. Look at the bullish momentum. We're getting across here. Look, this hasn't even crossed yet, and look how much potential there is for how many years it can go bull. So that's just an example to what can happen here. We are coming above that center line, but a break of that center, we haven't touched that center line though. So just to note that it was kind of close to that center line before it even ran up. Look, it kind of traded there close for a while, right? It traded up. This is where we are. Let's just say where the mouse point crosshair is exactly, like that's where we are now. Let's just see how many. Okay, maybe a little bit closer than that. Like around there, right? Give or take. Look how much room we could possibly have. It's not saying that it's going to happen for sure. I'm just trying to give an example of history, right? So there's a lot of room, and to note that we haven't been at these lows in the dollar since 2008. We haven't seen this oversold since 2008, and that's interesting because I haven't even noticed that till now. So I'll just draw it out to show you. Where is it? 32. Yeah, look, nothing. Look, 2020, wherever we are now, 2021. That there's a lot of room for that to come back down, right? So we haven't been that low. When was that peak? That was a couple months ago, like maybe three months ago. But look, have a look. How many years did we run? 4.5 years more. 5 years even. That's a long cycle. I mean, if you're buying the dollar in December, right? That could run for a long time. And just to show you how that could match Bitcoin, because it's Bitcoin's used, or not used, but it's starting to be used as a digital gold to hedge the US dollar, right? So you can see that it kind of makes sense because there was so much volatility to the upside, and I've never seen so much volatility to the upside before. You can even see on gold it only came up so far away from those moving averages. So that's just a take home today, that there could be a longer than expected bearish cycle that could take people by surprise, because I haven't even seen them really talk about that in the news, that the last bearish cycle was that long, 4.5 years, and we've just started a new one by the looks of it. Because if we're going bear, then we could be going bear for a while. As we said, at a 25% chance, it would have to be at least 1 year and 3 quarters, right? So that would take us to almost 2023. So just a kind of a new idea, because I haven't noticed that before, so I just thought I'd share it when I looked at the gold and when I was just going over the gold and the dollar strength index chart. So just keep it in mind, and I'll see you guys next time. Take care.